So you've said this today already, and it's also in the book, right? That it's irrefutable that we're heading into a sovereign debt crisis, or we're in one.
I believe we are.
Yeah. So why do you consider that to be so certain?
Yeah.
And what are the variables in the equation that prove your point?
It's a great question, and I don't know when it's going to happen. I don't know exactly how it's going to happen. Nobody does. Anyone who tells you does is full of shit.
Right.
You know, but it's math. It's just simple math, and it's thousands of years of history of watching this kind of math play out. And the math is as follows: if you are growing the debt faster than you're growing the underlying GDP, and this used to be my pin chart on my Twitter feed. I took it down because I've now got the book up there. But you know, eventually the gap between the two.
Oh, this is the red line, blue line thing.
Yes. Eventually the gap between the two becomes so large. The GDP is what provides the money to pay interest and principal on the debt.
Right.
You grow the debt at 8%, which is what we've done. Grow the debt at 4%, or the GDP at 4%, which is what we've done, 4.4 or something. And guess what? That gap eventually gets so large that one can't support the other.
Right.
And either the debt has to collapse in value through a defaults in 1929 style depression, or you have to get to growing the GDP really aggressively through money printing and inflation.
Yeah.
And that is the debt, death, doom loop, which has happened many times, many societies. There's a good chart in there by Hirschman Capital that shows when you get to about 130% of debt to GDP, a monetary crisis always results.
Hyperinflation stage 1.
Yeah, and that's where we are right now.
Yeah.
That's where we are. So in my view, the odds of this, you know, getting resolved, I mean, it's happening. It is definitely happening. And you see some other telltale signs. I mean, the fact that Bitcoin is close to a record high, the fact that gold is close to a record high, the fact that sovereign bonds are losing value in Bitcoin terms and in gold terms, these are all clues. And you said, what do we want to watch? So here's what I watch. I watch the price of Bitcoin. I watch the price of gold. I watch interest rates. And what I believe is going to happen is as these things continue to trend in unfavorable ways for the Federal Reserve is going to be forced into, and this is the title of the book, the big print. Because, you know, what'll happen, they'll have to do yield curve control. What'll happen is, well, let's back up. You're aware of this, most of your listeners are too, but it helps just as context. We're in a debt doom loop that goes in it. Let's take the U.S. federal government. Okay, the U.S. federal government with COVID came along, spending shot up a lot. We didn't cut it back. The U.S. federal government now spends $6.75 trillion per year. Okay, and we take in, you know, 1.8 trillion less than that last year, and that was the deficit. Right. We pay to the deficit gets funded by issuing debt. The debt sells into the debt market. We have an interest cost on that debt. Selling more debt into a fixed size market makes the interest cost go up. The interest cost going up, that's an expense for the government. That makes the deficit bigger. Can you see where I'm going here? Yes. Wash, rinse, and repeat. Yeah. More debt, more interest cost, higher interest cost, more debt. Yeah. It just gets worse and worse and worse.
And the debt's purchased with printed money.
And the debt is purchased with printed money. And so the point is that as that, you know, rinse, wash, repeat gets worse, you get into, you know, really kind of a sovereign debt crisis, you know, quote unquote currency failure. Now, where will it show up? It shows up in the price of gold. It shows up in the price of Bitcoin. It'll also show up in the bond market, in the U.S. federal bond market. And it started to show up. It showed up a couple of times. It showed up in 2008. It showed up in 2020. It showed up in the fall of 2023 when the 10-year got over 5%, and 12 Fed governors came out and said, "Oh, that rate raising program, that's over. We stopped that for now." You know, we were just kidding. And it's going to show up again because what's going to happen is people are going to start saying, you know, this debt. I mean, the sucker at the card table right now are the holders of long-term and medium-term U.S. government bonds because there's no way they're going to get repaid in nominal fair value terms. They'll get paid the cash back. It just won't buy as much because we're built in inflation. So what's going to happen is those interest rates are going to go up to compensate for that risk. Again, making the debt doom loop worse. The government's going to say, we can't afford to do that. And they're going to be forced into doing yield curve control, which is, you know, they did this after World War II, which they're going to say, we're not going to let the debt costs go above 4.5 or 5%. It's
price controls, basically.
Price controls. Yeah. How are they going to do that? They're going to buy the debt. What are they going to buy the debt with? Printed money, right? And so eventually, what, you know, at the extreme, the entire U.S. bond market, which is, you know, $36 trillion, looks at the Fed and says, sold to you. Yeah. You know, great. Yeah, you're right. This is a turkey. We don't want to hold it. You can buy it. Yeah. So now the Fed balance sheet, which is 7 down from 9 trillion, goes from 7 to add 36. Right. And that's just pure monetization, pure inflation, and that's the road to hyperinflation. I'm not saying we are definitely going to hyperinflation. I'm just saying it's a tail case. I think before all of that comes to fruition, we will have some kind of a monetary reset. I mean, I'm encouraged by what I hear, the things I hear out of Scott Bessent. I think it's good that we have a person like him as our Treasury Secretary now. I think he has an understanding of this issue. It may be too large for even him to handle, but at least he has an understanding of it. I think like Yellen, in my view, was clueless. And so, you know, if I'm correct, these things are in our future. And, you know, people might naturally say, okay, well, great. When, how, et cetera. I don't know. I kind of think in the next 5 to 10 years. But I do know this with high conviction, in my opinion, that you want to own things the government can't print, right? That's a no-brainer.
That's always a good strategy.
You don't want to own cash. You don't want to own bonds. Real estate, it works, but it's got issues and taxes and so forth. The two best things the government can't print are gold and Bitcoin. Right? And they will both work. Bitcoin will work much, much better. And the book describes that and shows that. But, you know, some people don't like the Bitcoin volatility. They're afraid of the technology. I get it. Gold's a good second choice. You know?
No, that's a great point. And then, you know, just to further that point, it's the physical gold and the physical Bitcoin, right? Because
well, that's
the paper gold and print the paper
So
Bitcoin.
let's talk about that, right? Possession is 9/10 of the law. This is why Bitcoiners say not your coins, not your keys, not your coins. You know, in the 30s, Roosevelt grabbed all the gold. You know, 6102. I mean, all of the Bitcoin that's sitting in an ETF, if the government decided someday, if Blue Team wins and they say to themselves, you know, gosh, it's funny, this Bitcoin and gold stuff is really killing the dollar. We just can't have this anymore. Let's make it illegal. Let's tax it. You know, let's make all those people turn that in. They could call up BlackRock. They could call up Fidelity. Say, send us all your Bitcoin. Give everybody cash for their Bitcoin. Don't steal it from them. Pay them out.
Probably CBDCs.
Yeah, whatever. And you know, and off we go. Well. Your Bitcoin, my Bitcoin, the self-custody Bitcoin, they've got a much larger problem. Right. I mean, you want to get the 12 words out of my head? I mean, you got to kill me, right?
Come and take it, as they say in Texas.
Exactly. And if you kill me, you know, I'm not going to give them to you if I'm dead. So, you know, the self-custody is important. And the same with gold. I mean, it's funny, as we speak today, I mean, we're actually seeing this. There's a run on the London gold vaults right now. I mean, we're seeing the LBMA suddenly, you know, a couple days, couple weeks delivery has become 6 to 8 weeks. And they claim because it's heavy and there was a lorry blocking the door. Did you see that?
No, I didn't see that.
They had this article. I mean, it's hysterical. You can't make this stuff up. Some guy said, well, how come it's taking so long? Like, well, we've had lorries blocking the street and the stuff's pretty heavy. And it's so like, funny. You're kidding me, right?
It's like a billboard for Bitcoin.
Yeah, exactly. It is.
Should have tried the digital version of that gold.
Yeah, it works a lot better. You can settle in 10 minutes. Yeah, right.
Thanks for watching. If you enjoyed this episode, click here to find more just like it, and here to find our most recent episode. Also, make sure to like this video to help shine light on the corruption of money, and be sure to subscribe to this channel to stay connected.